As we look at the market right now and today, we see that we are once more on an upside, on an uptrend right now. Keep in mind, just up to a few weeks ago, the markets were close to all-time highs in terms of um, major financial markets such as real estate, commodities, crypto itself, certain major coins. And before we saw the rapid downside or of the market based on, like we discussed many times, the uncertainties within the global financial market, particularly the trade wars between the two giants, US economy and the Chinese economy. But we see now all of a sudden an uptrend again. We are up just below 3% for within the last 24 hours in terms of market cap. Even though we're still under greed, still 28%, there's a lot of hope, a lot of enthusiasm that is hitting the market right now. Why am I talking about hope and enthusiasm when we're talking about crypto? It's because that's exactly what it's about. The crypto industry, financial industry in general, is triggered or literally led by fear and greed, right? So it's an emotional and sentiment-driven industry. So whenever there is news that is, that literally is more positive, it triggers the market, and the opposite obviously is the same as well. So with all of that said, why is the market actually upbeat? Why is it actually taking off a bit? Let's just discuss that. In addition to that, we're also going to highlight more because we always talk about something we know as the App Store moment, right? The Apple App Store moment. But today we're really going to emphasize that in connection to the Ethereum blockchain, the entire financial system that is outdated and that needs to be refurbished literally and brought on chain, that will need new infrastructure adoption, and also it will need regulators to be on board with that. And that's exactly where we are right now at this stage. So we are very early in the early stages of adopting a new technology that we've always been talking about, because this is why we always stress that let's look at the crypto industry for what it really is. It's a technology, and go for the technology, not just flipping coins, but look at the mid to long term value of an ecosystem, of a token, of a coin, whatever the case may be, and focus on that. What value does it bring in terms of solutions? What value does it bring to the community itself? What is it addressing? Is it even familiar with the challenges in the ecosystem, in the industry, and what is it addressing them? These are things we should ask ourselves. Now, to really get into the thick of things, I'd like us to kickstart this with this article right here. I want to emphasize that I like to emphasize that we've always talked about the App Store moment, right? And in last year alone, I want us to look at some numbers to really wrap our heads around, actually have an idea of what's coming towards us. So the App Store generated nearly 1.3 trillion US dollars in sales just last year alone. And this is Apple's App Store, one company. That's it, just a single company, a single market, right? $1.3 trillion in sales. That's a lot. That's more than some nations' GDP, right? Some countries' GDP, gross domestic product. So why am I emphasizing this so much? It's because if we go further down here and read, we see that the sales predominantly that came from the App Store were across physical and digital goods, so to speak. So literally, To put them into perspective, we can see here the majority of it, which is 78%, which is $1 trillion worth, came from physical goods and services. And this include categories like general retail. This means everyday things that we use, such as traveling. Retailers travel all the time. Every day the airports are full. Food delivery, who's not doing that? And ride hailing, the Ubers, the Bolts, the Grab, depending on which region you live, you're using this food delivery, ride hailing, traveling, and general retail. That's what represents 78% or 1 trillion US dollars on the App Store. These are things that we use on a daily basis: transportation, retail, food, ride, right? These are things we use every single day. And I'm trying to make a point here, community. So this is a company known as Apple. They're actually known for their gadgets, right? They are hardware developers and also got into software. So they produce laptops, as we know, cell phones, and they got into other markets like MP3s, watches, and so on and so forth. But now the main cash cow is literally the App Store. And this is exactly what I want us to understand, that it's literally that. And then I want to read this right here. It's incredible to see so many developers design great applications, build successful businesses, and reach Apple users around the world. This sets the tone for this session today. Apple has an app store, which is a technology that developers can develop applications, design them. Entrepreneur can build businesses, successful businesses. And because it has such a huge network of users, these developers and business entrepreneurs are reaching the users, Apple users specifically, around the world. We've seen this happen, and we always tell ourselves, oh, I wish we knew the future. We could tell what the future holds, and this is right in front of us. It's obvious what the future holds right in front of us. And this is the example of a company that laid the blueprint of what's coming now in this new technology known as the blockchain technology. Let's move forward. Today, the current event is that Trump literally pardoned CZ. CZ was convicted, and CZ, first of all, he's the founder of Binance Exchange, the largest centralized exchange in the world right now, based on market cap, based on volume, based on many metrics. And today, as we see, on Wednesday today, on Thursday, President Trump exercised his constitutional authority by issuing a pardon, right? And to CZ, who was persecuted by Biden's administration in their war on cryptocurrency. So this alone just shows you which direction the Trump administration is headed towards. And Binance is a large exchange and has onboarded hundreds of millions of users and brought them into the crypto industry, onboarded them. So CZ responded by saying that he's deeply grateful for today's pardon and to the President Trump for upholding America's commitment to fairness, innovation, justice on his social platform, on his X platform, right, or Twitter. So his father says he will do everything, they will do everything they can to help make America the capital of crypto and advance Web3 worldwide, right? So one hand washes the other, obviously. And why am I mentioning this? It's because outside of the US, Binance is the largest exchange. right? And even based on market cap, volume, liquidity, Binance is the largest. It would be even the largest in the US. When CZ was sentenced, one of the deals were that Binance can't operate in the US anymore. CZ can't be the CEO of Binance anymore. And that was the deal, part of the deal. But now, him being pardoned, what does this mean? Does it mean that Binance is now allowed to be operating again in the US? Does that give CZ the authority to be back on the wheels of Binance and become the CEO again? So these are questions that at this current moment, we still can't answer. But I'm sure as time goes, as time passes, we'll get more of that news, but that's irrelevant at this particular point. Because the point we're trying to make is we're just painting a picture of how this has changed and how we went from being persecuted by the former administration to now this administration is literally pardoning individuals, right, that are in the crypto space. So let's dig even deeper. And like we said, right, so it's major news, like we just talked about it already. And here again on Twitter, that's the breaking news of today. But even more important, I want us to understand one thing, and this sets the stage right here. So this is the Federal Reserve's website, as you see. And I don't want us to, I don't want to bore us with too much of this, but there's some things I just want to highlight here. So he starts with my objective in creating this conference is twofold. So there's two major things and two major reasons why this conference took place. And by the way, this is a conference of payment conferences where major blockchain projects, including Coinbase, many other crypto projects were invited to participate in this conference. So first, I wanted to have a conference that focused on the new technologies that have come from the DeFi and crypto worlds, and now they are entering the mainstream payment system. This is the first. And these are the feds. The feds are now talking. Federal Reserve is literally the largest mover and influential agency institution in the world. They set the rate, interest rate. They regulate the strength of the dollar, and so on and so forth. They have the capacity to print, right? To print money. They're the ones that we always wait for to cut interest rates and to regulate the US dollar, right? And ensure that employment is at its fullest capacity. So they are now coming here and talking about how they want to focus on new technologies that have come from DeFi and now are entering mainstream payment system. So his goal is to have a vibrant discussion about payments between the traditional payment participants and the new entrants from DeFi, from the DeFi world. That's the primarily. So we're talking about DeFi entering mainstream. Secondly, he wants to send a message that this is a new era. And keep in mind, this was just 2 days before CZ was pardoned. Just 2 days before CZ was pardoned. And this was the center stage, literally. And indeed, they're proving us that we're entering a new era right now for the Federal Reserve in payments. So the DeFi industry is not viewed with suspicion or scorn, like we just saw. Everything DeFi during the Biden administration was being sued, was being hit with lawsuits and all that. And this is no longer the case. So rather today, you are welcomed to the conversation of the future of payments in the United States and on our home field. Something that would have been unimaginable a few years ago. And this is exactly the fact. A few years ago, obviously, we know that Gary Gensler was the chair of the Feds and was suing everything that had to do with DeFi, staking, smart contracts, and all that. Now, here we are. The same agency is now pro DeFi actually is moving forward and wants to embrace it and use its technology and so on and so forth, right? So as you all know, we are well into a technology-driven revolution in payments. The time is here now. We've been always talking about this, that we're entering a period where we literally have the traditional finance being moved onto a new technology on chain. And this is a revolution that is taking place, and it's led by payments. Payments means stable coins, as we're about to see. So a number of technological advances are transforming the payment system, predominantly stable coins, like we said, and tokenized assets or real world assets. And these are making use of the distributed ledger technology, which is the blockchain technology. So three major things here. We're talking about blockchain. You talk about stable coins. You're talking about real world assets, tokenized assets. And then you're talking about the technology itself. Digital ledger distribution technology, that's smart contracts. So we have smart contracts, we have tokenized assets, and then we have stable coins. And all these are the rapid adoption of AI and increasingly the convergence between these innovations and the traditional financial ecosystem. So this includes institutions and infrastructure that our economy has long depended on to operate a safe and efficient payment system. So here we are, the Feds are talking about them embracing, and yes, this also includes the Fed, right? The Federal Reserve. The revolution transforming payments is demanding change everywhere. And I will say more in a moment. But the point here is that this revolution transformation in payments demands changes everywhere, predominantly through institutions and infrastructure. So and it's led by stablecoins, real world assets, tokenized assets, and the technology itself. It's making use of smart contracts, digital ledger technology. So where are we heading with this community? Where we headed with this is this right here. This article shows us that stablecoins that are the priority right now in payments, they are already took over Visa. Visa has been a giant. Visa is a 50-year-old company, and they've been taken over by a literally not even a 10-year-old crypto project that are stable coins. Predominantly USDT and USDC are the largest stable coins that are significant. They already are close to 3 times larger than Visa already. It's only a double up away, literally a double up away from automated. ACH stands for automated clearing houses. And just to make a point for us to see, before we do this, let's make a point. The point we're trying to make here is that the payments are moving on chain. We just proved that. The Feds have just said that. They want to move payments on chain. This is fact. This is not wishful thinking at a rapid pace. So in 2025, report reveals stablecoins are now central to the financial system. The Feds just said it. Rivaling major payment processors in volume, we just saw. So right now, stablecoins on chain have almost 3 times the volume of Visa, the largest payment, processing company literally in the world. So, and with 50%, over 50% of stablecoin supply being on Ethereum, Ethereum stands to capture this growth. We've been always talking about this. Now the Feds are in it. They want to build infrastructures. They want to adopt it. They're working together with public projects, crypto projects, and stable coins, real world assets, and the digital ledger technology, which smart contracts are predominantly on Ethereum. More than 50% of all of that is already on Ethereum. So Ethereum is getting ready to be provided with trillions of liquidity, like we've been always talking about. And This cycle is going to be massive because institutions are involved. Institutions have deeper liquidity than retailers, of course. But now let's look at something else again that I want us to understand, talking about liquidity. Talking about liquidity, we hear that JP Morgan, which is the largest bank based on market cap in the world, they're expecting that the Feds are going to end QT, quantitative tightening, during this month's FOMC meeting, right? This meeting takes place this month, actually in 5 days, based on which region you're from, specifically on October 29th. That's when this meeting takes place. And interest rate, there's a high possibility that there's going to be another interest rate cut. Now, based on JP Morgan's analysts, they're expecting that at this particular meeting, not only will interest rates be cut, but there'll also be quantitative tightening. Now, the question is, what does quantitative tightening means? Well, the ending of it. So first of all, this is, of course, a bullish news. So this is great. But let's now understand what really does QT mean. So quantitative tightening literally means is a monetary tool where central banks reduce the money supply by shrinking their balance sheet. So meaning that now they're going to end and stop shrinking the money supply, because in order for bull market to kickstart, you need to cut interest rates and then print fiat, do the opposite. So they'll stop shrinking the money supply, do the opposite, meaning cut interest rates, print more money into the economy, right? And what happens if you do that? We'll get to that as we close. Another thing I want us to look at is major DeFi applications and blockchains are moving back, migrating back to Ethereum. They launched their own layer 1 blockchain and thought it would be successful. Especially if you look at Aave. Aave is the largest lending platform in the entire industry, decentralized lending platform. They previously had their own layer 1 blockchain and left Ethereum. Now they're coming back. Why? Because over 86% of their revenue is still generated on Ethereum layer 1. So making their own blockchain, layer 1 blockchain, obsolete. It's like it's empty, right? There's no volume, there's no liquidity, there's no activities going on there. Same with the mobile payment network, Cello. They also had their own layer 1 blockchain, but now they are coming to Ethereum and creating a layer 2 blockchain on Ethereum. Same with the DeFi project Synthetics. They're relaunching later on, they'll be relaunching on Ethereum as well, the mainnet, next month in November. And then same thing with Consensus founder as well. Of course, he's the co-founder of Ethereum. He confirmed that Swift, the largest payment system, infrastructure, payment network, they are coming on Ethereum, layer 2. We could go on and on. Like we also have Ronin, which is one of the largest blockchain gaming layer 1 blockchain running. They announced that they're relaunching on the Ethereum network as well. Aave we already spoke about, and even Polkadot AI agents, they are coming on Ethereum layer 2 as well. So you see the largest players in the industry are abandoning their blockchain that they launched and coming right back home to Ethereum. So what's the point? What point are we trying to make here? The point we're trying to make here is this, community, is that the Feds have spoken, and the Feds have decided that they want to be part of a new technology, right? They want new technological advancements that will transform the payment system, led by stablecoins, tokenized assets, which Larry Fink is always talking about. And how he wants to tokenize all financial markets, real estate, bond market, commodities, foreign exchange, and so on and so forth, right? And these are trillions of dollars. And looking at hundreds of trillions, and looking at Forex alone, which is represented by stablecoin, is even over 2 quadrillion. So, and like we saw here, majority of that, like we saw here, majority of that is on Ethereum, as we can see here. So stable coins already have 3 times the volume of Visa. And over 50% of all of that takes place on Ethereum already. So Ethereum is the infrastructure, it's the layer. How did we start this session? By highlighting the App Store moment. Let's close out this session like this. App Store, Apple is just a single company that is restricted or registered in the US. And its limitations, it's limited, its accessibility is limited, right? To certain individuals that have a certain monetary status that can even afford the expensive gadgets. Secondly, it's introducing an ecosystem of, or a platform where 3 things come together. And these 3 things are developers. Many developers design great applications on that platform, on the App Store, and successful businesses are built on that platform, and users are on that platform. Now, we just saw similarities how Ethereum is where most developers are designing great projects. Great successful businesses are being built. Even existing institutions are building and building infrastructures on Ethereum. And then we saw users. We even saw projects coming right back to Ethereum. These are the similarities. These are the things that I just want us to understand and look at. And if we look at the bigger picture, we won't be swayed by this short-term volatility like we see the markets. Today it's up, tomorrow it's down. Uncertainty, fear and greed index is down to 28. We should zoom out and understand what's happening right in front of us and read between the lines and anticipate what's coming. So this session was to serve as a guideline, a roadmap for us to see that we are in this App Store moment, but the company is not a registered company known as Apple. The company that we're talking about, what we're talking about is a technology. And this technology is what the feds are talking about here. That's the technology known as the distributed ledger technology, and where stablecoins and tokenized assets are being built on it. So there's advancements in transforming payment systems. And to do that, you are led by stablecoins, tokenized assets, and the digital ledger technology. It needs infrastructures, needs to be built. This is why you see JP Morgan coming together with BlackRock, because BlackRock tokenizes assets. JP Morgan, which is a bank, uses these assets as collateral using their tokenized collateral network. Also, all of that is on Ethereum. We know Visa, MasterCard have Ethereum rails as well. We just saw that the Swiss Bankers Association, they're using Ethereum as well. And the Swiss government, they're offering Ethereum staking. We also know that large crypto projects, blockchains, and utility tokens are also migrating right back onto Ethereum, as we just saw. And most importantly, we anticipate how quantitative tightening is about to stop, money printing is about to start, and interest rate cuts are getting ready to be implemented starting the 29th of this month. So we are set to a massive bull cycle community that is about to come. And that bull cycle predominantly is going to take place on Ethereum, not based on speculation, but based on facts and based on what the feds already have also laid out for us. And we can see here, right, that same thing that we saw during the App Store moment, that generated last year 1.3 trillion just in sales alone. Now we're seeing the blockchain technology, Ethereum, doing the same thing, but on a much larger scale. So community, a lot of liquidity, a lot of volume is about to hit the blockchain industry as a whole, but predominantly it's going to hit Ethereum specifically, because that's where most of the activities take place. And that's where most of the largest applications, blockchains, are coming right back to Ethereum, because that's where the most volume is, right? So that's the session for today, community. I hope that there was some sense that was taken out from this. None of what we said, of course, is financial advice. We always urge the community to use these sessions as a point of reference. I also want to encourage us and remind us to engage with the tweets. All the tweets are out: Survivor, Killer Whale, and Bull Run. Let's engage with them to bring awareness to our ecosystem and our industry that we are so passionate about. Also, tomorrow is Friday, so let's ensure that we participate, engage as well. And for those community members that are active on Zoom, participate as well, and be part of the Zoom session tomorrow. And community, I want to wish you a wonderful rest of your week. Until we meet again, bye bye, everyone.